Job order costing. Job order costing is a costing system in which the cost object is a unit or multiple units of a distinct product or service called a job. Each cost can be traced to each particular job. In job order costing, items are typically built to order or unique services.
Step 1. Identify the job that is the chosen cost object. In this step, one would gather information to cost jobs through source documents. For example, a CPA firm will use job order costing to assign costs to each individual job. A job cost record will be used to record and accumulate all the costs assigned to a specific job, such as an audit engagement. Step 2. Identify the direct costs of the job. In the second step, we need to identify the two direct manufacturing cost categories, direct materials and direct manufacturing labor. For a CPA firm, the labor hours would be determined by how much time the employee worked on that particular job, and direct materials would include calculator, work papers, pencils, pens, etc. These graphs are examples of the materials, requisition form, and labor timesheet needed in this step. Step 3. Select the cost allocation base to use for allocating indirect costs to the job. In this step, we will select a cost allocation base for allocating indirect costs. Indirect materials cannot be traced to a specific job because different jobs require different amounts of indirect resources. Examples of indirect overhead would be utilities and electricity. The companies can allocate indirect costs by machine hours or direct manufacturing labor hours. A CPA firm would most likely use direct labor hours because it is more labor concentrated. The labor hours are the cost driver because it is the cause of the overhead. Step 4. Match indirect costs to their respective cost allocation base. The third and fourth steps are normally done together, but in the fourth step, we use direct manufacturing hours to allocate indirect manufacturing costs to jobs. This creates a cost pool that is called manufacturing overhead.
Step 5. Calculate an overhead allocation rate. In Step 5, we calculate the predetermined overhead rate by taking the estimated total manufacturing overhead cost for the coming period and dividing it by the estimated total units in the activity base for the coming period. The predetermined manufacturing overhead rate makes it possible to estimate total job cost sooner. For example, if we say our budgeted overhead costs totaled $40,000 and our budgeted direct manufacturing hours were $1,000, then our predetermined overhead rate would be $40 per direct labor hour. Step 6. Allocate overhead costs to the job. In this step, we look at overhead applied by multiplying the predetermined overhead rate by the actual activity. The predetermined overhead rate was based on estimates, while the actual will be direct labor hours incurred during the period. Step 7. Compute total job costs by adding all direct and indirect costs together. By adding direct materials, direct labor, and manufacturing overhead, we will get our total cost for this particular job.